Hey, my name is Tucker Crows. Welcome back to my channel, and in today's video, well, we got a stock analysis here of the company Platinum Group Metals. No, we're not referring to Platinum Group Metals themselves, but the company. I know, kind of a confusing company name, but probably works well for marketing. Anyways, let's get right into it. Alright, so they trade with the ticker PTM on the TSX or PLG on the New York Stock Exchange with $237 per share with a $234 million market cap. When we're talking Canadian dollars, and 176 and 173 million respectively when we're talking American dollars, and that's $7 Canadian per ounce or $5.18 US per ounce. And so over the past about week here, or a little longer than that, it's definitely ran up quite a bit. It was at like 140-ish when I first started looking at the company. Now it's up to almost 180, so pretty significant move there. Anyways, let's move into the stock chart. So we can see that on the 1 year here, basically just gone down and down and down. You know, the 200 day here shows that pretty obviously. And so we've definitely been hitting resistance right about this spot where we are quite a few times. So let's see if we manage to break through this spot here, or if we're going to get shot back down to the bottom of this range. Alright, so now onto their chart here. This is the 1 year. We can see it's basically just been nothing but down. And so we can see that more recently they've had a more specific pattern here. We can see hit here, 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 and now we're coming right here again. And so we're going to have to see if we manage to actually break through this resistance here, or if we dump back down. It does seem like the general market's rallying here, so that could help push us through. Though, of course, only time will tell. By the time this video's up and you're seeing it, we're probably already going to have our answer. And so we've also got a good amount of support here. We see bounce, 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 bounce. And so if we do fall off here, we should be able to have pretty solid support in the 140 range, so we shouldn't fall too far, but eventually we're going to have to break out of this one way or another. Which way that'll be, who knows? Hopefully to the upside. Alright, so it's the 5-year chart or the weekly. I just took out the 200 week so you could actually see price movements here, because the 200 week is so much higher, and so we can see that very similar story. It's just been down and flat for years. It did run up here in late 2020, like a lot of the other miners and precious metals companies did, but since then it's been down, 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 and down into this little range that we've got here. Alright, so let's look at their presentation here. I just pulled out some of the best slides in my opinion. Though first, if you aren't subscribed, please do that. It's completely free. It takes no time out of your day, and it would be super great for me, as I'm currently on the road to 1,000 subscribers, and I would love to hit that by the end of the year. No time for you. Only about 30% of you guys watching are subscribed. Do it if I would appreciate it. Thank you. Alright, so Waterbird, a tier 1 mining asset, reserves 19.5 million ounces of PGMs and gold, and so that's Palladium, Platinum, Rhodium are the PGMs they have, as well as gold, copper, and nickel. Mine life is over 45 years, so very, very long. Projected cost, first quartile, $640 per 40 ounce. I'll get into that in just a second, as well as projected annual production of 420,000 ounces of 4E in just a second. So what is 4E? Well, it's what they define as their combination of Palladium, Platinum, Rhodium, and gold. Waterbird location and highlights. So it's in South Africa, which is a generally safer part of Africa, right? Because you always got to think about jurisdiction, safety, those sort of things. That like something like Namibia is obviously the best, whereas, you know, a country like the Congo is going to be a little more dangerous. And so we can see also just where it is in general shows that this mine is clearly going to be pretty legit, right? We can see it's right by Anglo-American Platinum's mine. And so, of course, that's generally a good thing. If you're in the location of other mines, it shows that people have been successful here before. These guys probably can be as well. Bulk mechanized mining with a higher skilled workforce, safer to mine, Palladium dominant with full suite of PGMs, gold, and base metals, multi-decline ramp access, lower capital cost compared to deep vertical shafts, low chrome sulfide concentrate with base metal content, amenable to existing smelters. Now, I gotta be honest, I don't know what a lot of this mining stuff means. I don't necessarily know. So that hopefully you can kind of interpret that. I don't really get it. I can run numbers. I'm not an engineer or anything. Alright, so now on something I do actually understand, and that share structure, we can see that no debt. That's of course really good. More importantly, though, is their outstanding compared to diluted shares. It's a very, very small difference. So that shows that they're not really diluting like crazy with a ton of options and warrants. So that's what you get off the top here. I'll get to more in just a second. Though also I'll note, yes, they show some of their major shareholders. It's unfortunate that they do not show their insider shareholds. And one other thing here is that they do show some of their major shareholders, though they don't really give us a full breakdown, which is kind of unfortunate. Alright, so this kind of breaks down their 4E a little bit more. So it's 63% Palladium, 29% Platinum, 6% gold, and 2% Rhodium, along with a whole bunch of extra copper and nickel. We have 12.27 million ounces of Palladium, 5.67 million ounces of Platinum, 290,000 ounces of Rhodium, and 1.25 million ounces of gold, with 376 million pounds of copper and 728 million pounds of nickel. Alright, on to 2022 global palladium production. 40% is in Russia, and of course, Russia and the West not getting along very well right now. Things are almost like getting like nuclear levels in some ways. That's not good, but I don't know enough to cover that. I would go actually listen to Part of the Problem, Dave Smith's podcast. He had Scott Horn on recently. Go listen to that episode. It covers a lot of the situation very well. I would go check that out. Actually, that should be like mandatory watching or listening. I would go do that right after this video ends. Anyways, though, so I don't have enough to comment here, but generally that means that because a lot of the palladium is Russian dependent, that means that a lot of it could be kind of missed out upon by a lot of the West. Project timeline. Construction about 5 years, though partway through construction they'll get their first ore production, underground development and 6 years, production build up 3 years, and then commercial production. So obviously a little lengthy here compared to a lot of uranium mines, I would say, especially, who can often be, ready in 2 to 3 years. Though the difference here is a lot of those uranium mines will mine for 10 years, not 45, half a century. And they already have a mining right and DFSX completed, so they're basically ready to go. Alright, now on to ownership breakdown. Not good. Only 172,000 shares owned by individual insiders, which is 0.2%. And so if each share is like about $2, between all the insiders, that's only like 300,000, which is a lot of money, granted. But for a CEO of a mining company owning their own company, that's like nothing. I don't like that, especially when they would then try and hide it up as well. I do not like that at all, especially when you also look at dilution. Shareholders have been diluted in the past year, with total shares growing by 31.6%. So overall share structure, I do not like at all. I don't like that. I also don't like that their CEO is not doing a lot of interviews and stuff. All of that just isn't the best look on the company, in my opinion. So either way, let's continue into it. Alright, so their Waterbird project has 33.4 million ounces of their 4Es, which I explained previously, and the royalty is between 0.5 and 7%, not necessarily a net smelter royalty, but that doesn't make a huge difference to some word calculation. I just put in 7% into the DCF to be conservative. There's also a 28% tax rate, and they will produce 18.9 million ounces, and they own just over 50% of the mine, and it's located in South Africa like we went over earlier. The grade for their 4U thing here is 3.325 grams per ton. Then initial capex is 924 million, and so when you look at their sustaining capex, ends up being pretty low, only bringing the total capex up to 1.2 billion. OPEX is $789 per this 4E ounce, and their current 4E ounce price, I'll get into a bit later. Keep in mind, well below current metal prices, so obviously that's good. Construction, I just have 4 years, because it's going to be 4 years till they can start, producing, and then producing for 45. And before that was the mineral reserve, this is the mineral resource, and so 33.4 million ounces, 61% palladium, 29.3% platinum, 8.4% gold, 1.4% rhodium, so again, mostly palladium and platinum. Then breaking down the grade of everything here. So 0.97 grams per ton of platinum, 2.025 grams per ton of palladium, and 0.045 for rhodium, and 0.28 for gold. And then copper and nickel, 0.105% and 0.165%. And so obviously individually these are all very low grades. That's because there's so many metals in these deposits, and so when you add it up, it's not a horrible grade. And I don't know the PGMs as well. 3.325 grams per ton would be very low even for just a pure play gold mine. Though, for platinum, I would guess that's probably pretty good, because platinum tends to be a lot rarer than gold, though that's just me completely guessing. I have no input here. Please let me know in the comment section down below if this is a good or bad grade. I actually have no idea. Okay, and so onto the DCF here. So, basically, their 4E, what that is, again, that's their basket of all 4 metals, and so, of course, like always, I'll also note it's 50% capex and OPEX inflation, 10% discount rate, so obviously conservative numbers. I also want the highest possible royalty of 7%, which is very, very, very high, and so, basically to get into it here, so in September 4th, 2019, this is when their DFS was made, and that was $14.25 in their 4E spot price, and so that equivalent to gold was $1,500. And then this is their most recent update, April 2022. At that time, gold's price was $1,900, and that was $20.39 in their 4E spot. So when we look at about $1,500 gold, that means that they were not profitable. although this is mostly going to be dominated by platinum and palladium. Gold's just the easier number to reference, since everyone kind of knows where gold's price movements are. And so, basically, at $1,500, $1,600 gold, they're probably not doing too well, right? Because their break-even is actually going to be at about just above this September pricing, so let's say $1,550-ish in gold. And so their break-even price is not a lot above where gold is today, though gold doesn't need to go up like crazy, right? Only at about 1900s as an equivalent for them to be massively undervalued. So right now, they're actually very fair valued, right? Because if about 1400 was equivalent to 1500 gold, then about 1500 might be equivalent to about $1,600 gold, right? So right now, I would say they're actually like probably fairly valued, I were to guess, based upon current metal prices. Though, that's kind of me estimate with the 4E stuff here. Again, kind of confusing. Looks like they're pretty leveraged here, of course, to price of metals prices. A lot of the price of metals miners are, but they've also sold off a lot. So, either way, this is not financial advice. Do your own research. Thanks for watching, and I will see you next time.